All right, let's rock and roll.
All right.
This is a fun episode that we're going to be talking all about franchising, particularly veterans in franchising. Justin Ghadery is the president and COO of EverSmith Brands, which is a private equity backed portfolio of franchise brands. And EverSmith is a sponsor of 51 Vets, and Riverside is also a sponsor of 51 Vets. The reason why we're shooting this video is because this particular pathway within franchising is relatively unknown compared to the other pathways that our 51 Vets members go down, whether it's investment banking, management consulting, or going to a PE-backed company where the general manager of a Chattanooga-based HVAC company. The purpose of this is really to give our members and anybody out there just more information about the opportunities within franchising so they can make a great decision. So, Justin, thanks for coming on and doing this. Can you just give a background of what is EverSmith Brands? And then maybe we'll just do a screen share and just walk through, if you want, after you kind of give the high level, each one of the brands and, just
Yeah.
a high level overview of each one of those brands. But maybe before going to that, what's your background? How'd you get into this?
Yeah. No, thanks. So, well, first off, happy to be here. Happy to be a sponsor. Like you said, president and COO for EverSmith Brands. EverSmith Brands, we're a PE-backed platform by our private equity sponsor, which is the Riverside company, also a sponsor of 51 Vets, as you know. Let me back up and go my background. Spent 8 years in the Marine Corps. Joined after 9/11, was in the Marine Corps for 8 years, got out just before 2010. And Throughout my career, I've led large teams, both corporate-owned businesses in the franchising space, and progressed in different leadership roles, and really found my passion in franchise business model. Franchising is not an industry, it's a business model, as you know, and there's plenty of different spaces in the franchising world, but specifically for EverSmith Brands, we are a franchise platform. We focus specifically on business to business, commercial space businesses. So we have 6 companies today, and I'll share my screen here in a second and go through those brands, but we focus primarily, again, on commercial facilities, business to business relationships with our 6 different companies we have today. And the original investment was back in 2020 by Riverside in our first brand called Clintar, which is landscape and snow management. And since then, we've done 5 add-ons. So we're like I said, 6 companies today, likely to be more here in the near future. And franchising, all of our businesses are under the franchise model. We have 280 franchise owners across the 6 companies. And those 280 franchise owners have some of them are single territory owners, like you said earlier, the example in Chattanooga. Some are single city owners, some are multi-unit, multi-state owners. Some are even looking to expand in multiple brands as multi-unit operators. So really, really exciting space. And real quick for me, like I said, I've been in the franchising space a long time, have a lot of passion and just respect for small business ownership and entrepreneurs who want to own their own business. And veterans, what I'm excited about talking about is play a huge role in franchise ownership in terms of the odds of success, the qualities they bring to the table. So that's a quick background about me and our portfolio, but happy to share screen as well.
Yeah, let's do a quick screen share just to walk through the portfolio, and then
Sure.
I'd like to learn a little bit more about why veterans are particularly good for franchising. So I will share it now. I have it pulled up,
Oh,
and
perfect.
we'll kind of start off at the top with maybe actually let's do Kitchen Guard.
Yeah, absolutely. So, like I said, 6 companies today, all in the commercial B2B space. Kitchen Guard falls in the segment we have, Jordan, which are more of our commercial kitchen space. So, Kitchen Guard specifically, we do a commercial hood cleaning and what's called a filter exchange program for your commercial kitchen. So, think of your, favorite restaurants, small mom and pop operators, all the way up to your large chains, Outback Steakhouse, Ruth Chris, this, that. a lot of these kitchens are driven by fire code. And really all kitchens are driven by fire code across the country. And that means it's required for them to meet certain standards to keep their kitchens safe, preventing fires, preventing grease buildup, and staying compliant with different regulations, both at the state and federal level. And so Kitchen Guard, we do the kitchen cleaning, we do the hood cleaning, we do filter exchange. And like I said, we just started franchising this business. So we bought the business from the founder a couple of years ago. About 12 months ago, we started franchising this business, and today there's over 100 territories already sold. About 25 of these franchise territories are already up and operating and having a lot of success. It's a very, very popular business and a very necessary business. So that's the Kitchen Guard business.
For
Um,
Kitchen Guard,
um, yeah,
uh, for Kitchen Guard, what's like what uh how much does it cost to buy the franchise, or like what's the financial component of this, and maybe going through
yeah.
these?
No, no, great question. So important to know, most of our brands range on the low end from, anywhere from about $120,000 initial startup cost up to, north of, $250,000, $300,000 initial startup cost. That's going to include your initial franchise fee, Jordan. That's going to include your initial 3 to 6 months of working capital. That includes your equipment, some of your initial startup fees with staffing, permitting, et cetera. And like I said, equipment build out, vehicle build out, and those things. So that initial cost I gave you will get you up and operating so that you can start to have revenue coming in and begin to have cash flow to scale the business and ramp
Yeah.
your business.
Well, so let's dive into like, I mean, let's just go into the financing of it. Like it's probably in front of people's mind, like, okay, Justin, 120 grand, fantastic. Let me, let's say one of our members just getting out is like, they might not have 125 grand. Like for veterans, what are financing options that are available? How do they
Yeah,
qualify this?
I love it. You nailed one of the biggest key points, which is why I'm so excited to sponsor you and the 51 Vets team and talk more about this. Veterans have access to a lot of special incentives that we all, sometimes hear about right when we're getting out, sometimes not until, years later. But there are so many different programs out there. But some of the specific opportunities as it relates to financing is, you've got SBA loans, VA specific SBA loans, and there's even some grants, to do with the GI Bill that are actually translating into the space nowadays as well. But all that to say, the access and support incentives that are available to veterans are second to none. And so most of our franchisees, Jordan, come into any of our brands through some sort of a SBA express loan or an SBA loan. And once approved, not only does the SBA cover all the initial startup costs, but it will also cover, ongoing working capital as well. And that's again where
Yeah.
a lot of franchising businesses start, but specifically ours, which are on the lower end of the startup costs. It makes it really affordable and a little bit of a lower barrier for veterans to enter. But again, those organizations and incentives around immediate training, financial management, financial education, which really ease the transition into business ownership.
What does that process just ballpark look like from start to finish? Like,
Yeah.
okay, I'm interested. Let's say that EverSmith likes me as a potential franchisee, and I need to get a loan. How long does that take from soup to nuts? Just ballpark.
Yeah, great question. So we typically can go from a person who's interested in just having initial conversations all the way through signing a franchise agreement in as little as anywhere from 60 and 90 days up to about, 4 or 5 months after they've done all the diligence. And what I mean by that is that's not just the financing in the background and getting approved for all of that, but also meeting the team, meeting the founders, meeting the operators that they're going to be working with that are going to support them from the franchisor level, being educated on all the components of how do we support you in marketing, staffing, training your staff, finding your site and your location of where you're going to operate your territory, the data on your customers. And then most importantly, once the person becomes a franchise, owner and they've signed a franchise agreement, we will provide them with, tools to help build out their business plan, scope out where they need to achieve in targets of revenue, how to manage their cash flow, when it makes sense to invest in another person in staffing, another piece of equipment or another vehicle, based on their ramp model. So all of those things can be accelerated, back to your question, in a relatively short timeline, especially in a business like ours where it's B2B, kind of commercial space. The ramp up time is a lot less than it would be in your traditional brick and mortar build out of a, 10, 20, 30,000 square foot facility where you've got a bunch of design and permitting, which those are good businesses as well to get into for some people. But our businesses at EverSmith Brands have a little bit of a shortened timeline to get there.
Yeah. Um, I don't want to jump just into the economics because we can go through the portfolio. Maybe we can come back to that. Um, people could also look at the website, but maybe we can jump into a little bit over to like how do the franchisees that really make money in this,
Yeah.
how what have you seen as like the common playbooks? Is it okay, I see this, one of the brands that you have, US Lawns or Kitchen Guard or
Yeah.
Clintar, is it like, do they succeed mostly by like they just crush it in their small area of Eastern Tennessee and they buy four different brands, or one brand and they get to Eastern Tennessee, Middle Tennessee, and like what does it actually mean? And if you could talk to what your limitations are that you cannot speak to for the financials, but also what can you speak to? Because if we're
Sure.
looking at careers post MBA, for example, um,
Yep.
those numbers are pretty spread on like what the financials are looking like. And if I'll give an example, like if they're going to go to a lower middle market, private equity owned home services company that does pest control or roofing or HVAC, like they as a GM, they could be making 150 plus bonus profit incentive
Yeah.
units. And they just don't know what it even looks like and what to expect in the
Yeah.
franchising business model. So if you could talk to what you can talk about for the economics, and also when franchisees succeed, what is the playbook that they run to make serious cash? And then maybe talking about the trade-offs, because this is what I found. I know very little about this. I think this is great for people who feel like a square peg in a round hole, particularly people who are
Yep.
10 plus years of active duty, maybe 15 plus, and like, I can't be an associate in an investment bank. Like,
Yep.
okay, well, I want to do something entrepreneurial, but I want to take all the risk of entrepreneurship. So I just threw a lot at you. Let's take it from
Yeah, I wrote it down. I was organizing my thoughts. Look, man, I get excited. I can talk about this all day, so I'll try to be concise, and then you tell me where we want to expand. You nailed some impactful questions that, like I said, we could riff on all day long, but I'll organize it quickly. You nailed on something at the very end, though, that one of my best friends who's transitioning out of Special Forces, Army Ranger, he it's interesting. He could easily go and succeed, like you said, in the private equity world, sit on a board and play that role. And I also understand, there's going to be times where there's a trade-off, right? There's that entrepreneurial side of a lot of veterans, especially if you come from a more elite kind of community, military community like 51 Vets, really serves. And there is a trade-off, right? There's a trade-off to running a playbook and having a structured playbook and a system that you're a part of, brand standards. It's no different than in the military where, we don't get to pick and choose like, I don't feel like wearing the uniform today. I'm going to wear a different, a different top, or I'm going to wear my decorations a little bit differently. You don't get to do that. You don't get to choose that, right? There are trade-offs. I think going back to, what's really critical to discern is, when we're at VetFran, because I sit on the committee for VetFran, which we try to get more veterans involved in the franchising business model. At VetFran, we're going to also support 51 Vets. VetFran is brand agnostic committee as part of the International Franchise Association, where we just want to get veterans into the model, whether it's employment, it's ownership, doesn't matter. To your point, you could come in as a veteran and take a great role in executive leadership in a franchise company, or working for a franchise owner who is well capitalized and very successful and have a very successful career, learn a lot of things, and then decide if ownership is for you or not. Or you could go right into ownership, right? There's a couple different pathways there. Well, there's a few pathways there, not just a couple. But speaking back to ownership, important to understand. You talked about the economics and what we can disclose, what we cannot disclose. Before a person becomes a franchise owner anywhere, whether you're talking about a Dunkin' Donuts, a Planet Fitness, one of our brands at EverSmith brands, there's a document that's available in any state you're in called the FDD, Franchise Disclosure Document. The FDD provides and discloses all the critical information to help the candidate decide if this is what they want to do or not. Economics, financial reporting, different cohorts of the underperformers, the overperformers, what are the averages, et cetera. And we have all that readily available for EverSmith. But your question around what's the playbook for, the top performers, and most of us as veterans, we don't do things because we want to kind of like be on the bottom end,
Or
right? Like we don't want to be
if
mediocre.
we
Yeah.
could rewind. So on the first point, if they want to know the economics, they need to
Yep.
go to the brand and then to the FDD on your relevant brand's website.
Yep, you can find the access to the FDD on the brand's websites. There's a pathway there, or there's several companies out there, Jordan, that will provide you a copy of the FDD. Sometimes if you're requesting too many, you might have to pay a small fee to get copies of these, but all those are available for you online. And there's various companies out there that provide FDDs. But yes, if you are inquiring with a brand, any brand, it is a requirement for that brand to provide you a copy of the FDD as you're going through the candidate process. They
Yeah.
provide you a copy for free. And your role when you disclose that FDD is to take a couple of weeks to review those disclosures, understand the requirements in the brand, the fees, the franchise fees, the royalty fees that you're required to pay, the brand standards that are non-negotiable, everything from training all the way through the operations manual and the franchise agreement, the life of the agreement. All of that literature is spelled out for you. It's required before you sign your franchise agreement.
Okay.
And does that help clarify that
Does
piece for you?
does it show for a particular brand, here are the range of outcomes as they're trying to
Yes.
figure out, am I going to make money in this? What's the return on investment, startup costs?
Bingo.
Okay.
Spot on. Absolutely. That's where they can start to figure out their ROI. How long is it going to take, for the cash I put into this business to pay it back, whether they're self-funding or they're taking out a loan. There's amortization schedules, there's loan schedules. You can do the math all the way down to the penny, month over month, to kind of see how long is it going to take you to break even. And again, that is reported in the FTD on here's what and a lot of brands, they have the ability to report the FTD differently. It is underwritten state by state, so it has to be approved by state, underwriters to publish that information, which is good, right?
Why
There's
is
a
it
little bit
that
of
one of your brands has 50 different FDDs? And I'm just,
no.
is it state by state?
State by state, but the FDD itself shouldn't have different literature. The requirements are slightly different on timing and on when you can sell in different states. Some are registration states, some are non-registration states where
Okay.
you have to be registered with the state. So that's a little bit different state by law.
Okay.
But to your point, the FDD, what's for a brand, there shouldn't be different versions. Now there throughout the year, a company might update their FDD and file an amendment to the FDD, but that's only if there's
Okay.
structural changes, lawsuits,
Yeah.
leadership changes. But to your point, the economics shouldn't be changing. There's not various versions. Every year, you're required to file that FDD as a brand and report how is your brand doing? How are the franchise owners doing? From a revenue, sometimes you can find EBITDA in there. You can find, to your point, how long it took to break even. So there's various metrics and trends in there that you can find.
And is the restriction on you that you can't talk about the FDD in public channels? Or like what questions can franchisees ask you?
Absolutely. Well, they can ask anything that's related to the FDD, absolutely, before they become a franchise owner. Absolutely. They can ask, what are your best performers achieving? What are the challenges your worst ones are facing? They can ask all of that publicly. Absolutely. Now, the other piece, a part of the process, Jordan, is what we call validation process. So a candidate, let's say Jordan was looking to come onto a brand, again, with Dunkin' Donuts or an EverSmith brands, doesn't matter. Part of the process is you would go and talk to other franchise owners in the system to
Yeah.
understand the good, the bad, the ugly, what are the challenges, how are they doing? And it really is for you to validate that this is the brand you want to invest in and sign a franchise agreement with, because it's a big commitment, right? Most brands, our brands are typically a 10-year franchise agreement, so 10 years of your life. Sometimes companies are a little bit shorter, a little bit longer, depending on the business model. But that brand validation is so critical, Jordan, because especially if you're talking to other veterans or just whatever, even if it's not a veteran, it's another business owner. You can start to figure out the trends of the folks that are doing it and doing it really well, and what were their best practices to get there. And listen, it's not rocket science. It's not some hidden sauce that helps you get to success. For our brands at EverSmith, the best playbook, it's the people who relentlessly know how to execute the basics. They know how to hire good people, especially in the B2B world, right? We're very hands-on businesses at EverSmith. They're very process people driven business services that we're providing our communities. So the best performers that scale their businesses and get a second territory, third territory, and start to really have a meaningful business, they're executing on those basics. And I can tell you this, our top performers at some of our brands, their individual territories are doing over $20 million of revenue. We have a $1 million club and a $5 million club, a $10 million and greater club that we just celebrated a couple of our brands at an annual conference. And you've got franchise owners who are, their revenues are north of $20 million a year in revenue, with a nice margin, well over, 15, 18, 20% margins on that business. When they go to exit that business or pass it on to their kids or whatever, their retirement, you can do the math on the multiples. I mean, there's some wealth creation here for franchise owners, significant wealth creation.
So, I mean, how for the people who want to do, who are um, not in the bucket of franchisees who's just like, all right, I want one in my town, and I'm perfectly happy making, 1 to 200 a year, whatever that is. That's what I want. For the people who are not in that bucket but want more upside, like, what's the strategy? Is it to go to your Eversmith team and say, okay, of all these brands, what are what territories are underdeveloped, and I want to go take that risk, and I'm going to move my family to
Yeah,
Spartanburg, South Carolina, that doesn't have a Clintar or landscaping one, and I'm going to go own 3 brands in that area. Like,
yeah.
how do they approach it?
Well, I think it's there's no magic path to that, but I will tell you, what we see the most common trend is, and what we try to coach on is, you should focus on your first territory, your first business, get it to a great place before you start casting your web too wide. We try to make sure that they're well capitalized, they got a great operating plan before they start going multiple territories, multiple brands. Now, as you know, it's just like anything else in life. Some people scale faster, they get success faster, they hit the ground running, they hire great people, they transfer skill and scale their business fast. And so everything you just referenced, I had a conversation this morning with one of our franchise owners who is already owns 9 territories. They're already looking at buying. We have an emerging brand that we're getting ready to go to market with and start franchising right now. And they're already saying, we want to buy that brand in all of our territories. Here's our operating plan. Now, they have, to your point, a nice back office of shared services and infrastructure, things that you can share across multiple territories, legal, admin, the finance and accounting, not to take anything away from those professionals or those departments, but in our business, those are not customer facing. Those can be shared services across multiple territories. So when they hit that economy of scale, they can start to move really, really quickly. And so we're providing that for them, and we prefer to invest in people that have already proven the business model and they're proven operators.
How long does that
But then
usually
back to your point, the preference would be though, focus on your first baby, get your first business up and running really, really well before you start going too wide, too fast, right, with other territories and other brands.
about how I know it depends on the business, the
Yep.
operator, the territory, but what do you think is if you were to say an average amount of months or years that it takes to get it to like, okay, this person understands how to operate. Now, as a franchisor, we want to talk about more territory or more brands within their territory. About
Yeah.
how long does that take?
Yeah, I think it can be summarized in the range of anywhere from, the first 12 months that they've been open and operating to about that 18 to 24-month range when we can start having those discussions. And I say that as an average because of our 6 brands within EverSmith brands, the sales cycle is similar, but the timeline can be a little different. Some of the sales cycle could be 90-day turn, right? Some could be a little bit longer depending on when you're conducting the services, collecting, and getting your revenue back in your cash flow. So with that said, we've got probably 3 out of our 6 brands where most of our franchisees are hitting that break-even point by month 12, month 13, month 14. One of our emerging brands is even shorter. They're turning profits in 6 months, 7 months, at the best, kind of performance level because there's a little bit less overhead in that brand. And then a couple of our brands, yeah, it takes a little bit longer to get ramped up, but by month 16, 17, 18, they're breaking even on our worst case scenario. And then from there, we can start talking about territory 2, territory 3, multi-brand concepts, et cetera, because that's the thesis for our entire platform at EverSmith Brands. All of them are dealing with professional facility managers, property managers, HOAs, large retail property owners. Whether you're our landscape and snow brands or you're our commercial kitchen brands on our website, we've got carpet rest cleaning and hardscape surface specialty cleaning for office, Class A office building space. We've got a restoration business. All of them are dealing with, for the most part, what we see is the same decision maker, right? So there's a big synergy around there. If our landscape and snow franchise owner is servicing the Honeywell corporate headquarters, we're also trying to get in to do the commercial cleaning. We're also trying to get in to do, the floor and grout and specialty cleaning of the carpets. Just to get the full synergy around.
So, what maybe shifting over to vets and franchises of the things that do work and don't work. Like, what are the reasons why? I know it's such a broad category, but maybe within the 51 vets community, from the special operations community and aviators, why could they succeed within the franchise model? Why should they consider
Yep.
this versus other career paths? And then maybe for people who have done the franchise model but it didn't work out, what are the reasons why it generally does not work out within the
Yep.
franchise?
Yeah, let me start with the second question and then work backwards because I could talk both topics all day, but I love talking about veterans. I think the why it doesn't work out time and time again, and you see this any platform, any business industry you look at in the franchising space, most of the time the reason it doesn't work out is because they are either not capitalized and managing cash flow and investments the right way, and or they're deviating away from the playbook that we know works. when you're entering into a franchise system and a model, the playbook has been proven. It has worked time and time again, or at least it should have been, unless you're rolling the dice on a very early startup that, hasn't been proven. But for the most part, our brands, they've been proven. So it's two things, right? It's poor financial literacy or management and cash flow management, or it's deviating away from the playbook because the going's getting tough. And when the going gets tough in business for any of us, which it will, and it always will, it's not easy. It's really easy for these folks to kind of get, start to cut corners and maybe reduce staffing and say, you know what, Jordan, I'm just going to be the sales guy for my business and the operator, and I'm going to do the marketing, and I'm going to be the janitor. And it's, and unfortunately, sometimes you can't do those things, right? You have to follow the system. You have to follow the playbook, and commit to that playbook. Segues into, why veterans. I mean, look, it's no hidden secret. Veterans have a different work ethic. We have different leadership skills. We have different people management, small unit leadership skills. We understand how to motivate, inspire results out of people, set direction. And most importantly, we know how to put our head down and be resilient. When times get tough, we work even harder to find a solution. And that's why veterans coming into a system where there is a playbook, and relentlessly driving the basics, they tend to be the top performers in any of our businesses, whether they started the business from ground up or a veteran came in and purchased an existing franchise business from somebody, took the territory and built on it. And then we start to see those businesses, 10, 20% growth year over year in large businesses. I've got one down in Dallas, Texas. I mean, they're 18% year over year growth, and it's a veteran that purchased an existing business. And this is like a $6.5 million revenue business, and they're double digits growth every year. And they just took an existing business and implementing very small changes as a veteran. So back to veterans, having that ability to work with structured systems, processes, that resilience, that small unit leadership, it is so critical. It is a huge competency we look for in all of our business owners. But when we have veterans, in the candidacy pipeline, even better.
This is a random question. Who do you think are the most successful franchisees who are veterans outside of this that everyone in the industry knows, like, or that everyone the vet fran community loves? So we're like, all right, here are the top three veterans who are in franchising.
You mean like by branch or like enlisted officer or?
Or by like they've just crushed it financially, and everyone knows them. Of like, the poster child for, this is why vets go into franchising and crush it.
Yeah. I
You
mean,
can make some enemies during this if they're out.
I know, and I don't want
So
to be,
feel free to
be
name them
biased.
all.
It's funny. No, I don't want to be biased. I mean, listen, I don't want to just be too general, but we do see, we've got folks that are in the enlisted side, officer side that come in and they both excel at a very, very, very rapid level. I think it's less about specific branch or enlisted or officer and more about the folks that most of us surround ourselves with in these communities that understand what it's like to understand the system and then say, all right, here's my bar. I'm going to raise the bar, one step
Oh,
higher.
I meant,
And we got a lot of veterans, man, that hire a lot of veterans, from the community. And a couple of our veteran-owned businesses, they only hire veterans, even coming right out of the service. And I mean, they're thriving. Hey, Jordan, I do have to jump to a call
yeah, no worries.
here right after us, but
If people are
um,
interested in getting in touch with you, what's the best way to do
yeah.
it?
Yeah, absolutely. Well, first off, you can reach me, my personal email, my work email, justin.ghadery@eversmithbrands.com. My personal one's justin.ghadery@gmail.com. But absolutely reach out, and happy to move the relationship just into all exploration of both franchise employment and or ownership. Would love to have them at EverSmith Brands and part of the Riverside community. We've got several franchise platforms at Riverside. But even if we got veterans involved in the franchising business model, whether it's in leadership and employment or ownership, it's a win. It's a win for the whole entire business.
There we go. All right. Thanks a lot for coming
Yeah,
on.
yeah, absolutely, man. Thank you. All right.